Miss you more, baby. Miss you more. Emma?
Hi, Butugan.
Oh, look, little guy. Hmm. Ah. Oh, why? Mic check. 1, 2, 1, 2. Oh, hey. We live. We live. Sorry, guys. I didn't know that we were live. I was still discussing with the moderator, texting them, hoping that, telling them that I've streamed. But my apologies. Good evening, good evening, good evening, everybody. Hope you guys are doing great. Hope you guys are doing great. Please confirm if you can hear me. 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 Can you guys hear me? What? Why? Can somebody confirm if you guys can hear me? Hello, can somebody confirm if you can hear me? Can somebody in the comment section please confirm if you can hear me, if you can see me? Can you hear me? Okay. I don't know if I'm audible, if you guys can hear me. I don't know if I'm audible. Can somebody please confirm if you can hear me before we proceed? Oh, Visham Singh says yes. Okay, perfect. We can hear and see you. All right, 100%. Thank you so much. Good evening, everybody. Hope you guys are doing great. Hope you guys are well. It's yet another beautiful, profitable Monday. Hope you guys enjoyed the month of October. Tomorrow is the last day of October, so October has been quite an interesting month. It's been quite a good trading month. The markets were too volatile this month. Let me know how your month was in the comment section, please. Confirm in the comment section. Let us know how was your trading month, the month of October. Now, before I proceed, I just want to put a disclaimer that any opinion, any news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and that does not constitute as investment advice. As I always say, if you're looking for investment advice, please speak to a regulated entity or a regulated key individual by the regulatory board of the country that you are in. All right, 100%. As I continue with the slides, can you guys please let me know where you are tuning in from? Let me know where you are tuning in from, the country, the city, your name, and whether you're a beginner or an advanced trader. Please let me know in the comment section your name, your city, your country, as well as whether you're a beginner or an advanced trader. Please let me know in the section. I'd like to know who am I talking to and from where. And at the end of this session, I'm going to give you guys a promo code to get 100% deposit bonus so that you can maximize your profit potential. All right. The promo code, I will give it at the end of the session. Please make sure that you stay tuned till the end of the session to get the promo code so you can get your 100% deposit bonus. All right. For those of you that are joining us for the first time, let me do a quick introduction. My name is Isaac Izy. I'm a professional Forex trader with over 10 years of experience. I'm a founder and CEO of Flexi Forex Trading College. And over the years, we have trained over 5,000 students. We've held more than 300 Forex seminars throughout the Southern African region, and we pride ourselves in providing new traders with proven strategies and empower them to succeed. That is what we do, and this is what I'm here to do today, to empower you guys with proven strategies, Forex simplified, in order to empower you to succeed. Now, if it is your first time here, please do let me know and say, Isaac, this is my first time with you here, and let me give you a warm welcome. For those of you that are not joining us for the first time, thank you for coming here again, which means you are back only because you feel like what I do is valuable, and that's why you are here. All right, I'm happy. I'm happy. All right. We have Ronald from Stellenbosch, Cape Town, intermediate trader. All right, how's it going, Ronald? How's it going, Ronald? You are welcome. You're welcome. You're welcome. Right. Let's see. Right. Hope you guys are ready for today. Are you guys ready? Are you guys ready for today? Live on YouTube. Click below to join. Alive. I was just inviting other people so they can join us. Yes. We have Chad from Cape Town, beginner. Oh, it seems like we have a lot of Cape Tonians and Cape Townians? Is it Cape Townians or Cape Townians in the building today? Welcome, guys. Welcome, guys. How is the weather in Cape Town today? I heard it's been very cold the past few days. In Joburg, it's been raining today. Hi, good to see you, man. Great to see you too, KD. Where are you tuning in from, KD? Okay, so let's begin with today's session. So before we begin today with our technicals, I'd love to just decode a few myths and set the record straight. All right, set the record straight so that next time when you see this, you know that it is a myth. There's nothing more to it. It is that it's a myth. It will set your expectations high, it will set your hopes high, and eventually it will lead to disappointment. Right. So, myth number one is that you can be profitable in X amount of time. KD Ingole, all the way from India. Where in India are you from? Myth number one, you can be profitable in X amount of time. Now, everybody that comes into trading, they want to have at least an idea of how long it will take them, to be profitable. As a professional trader and as a mentor, I get this question a lot. How long will it take me to be profitable? And I always say there is no set amount of time that is set to say it will take you 3 months, or it will take you 5 months, or it will take you 5 years to be profitable. So if you ever meet someone that promises you that you can be profitable in X amount of time, just know that person is likely to scam you, or they don't know exactly what they're talking about. There are chances, all right? There is no set time for profitability in trading. It all depends on the amount. It differs from person to person. It also depends on the amount of time and effort that you put in the work. So there is no amount of time set to say it will take you a set amount of time to be profitable. However, you don't want to be trading for 5 years and you're still not profitable. It either means Forex really is not for you, or you're not really investing enough time in learning the markets. All right. So it should take a reasonable amount of time, obviously, to be profitable, but it shouldn't take long. But also, there is no set amount of time. For others, it's 3 months. For others, it's 6 months. For others, it's a year. For others, it's 2 years. All right. So it all depends on the effort that you put in. Remember, the outcome will always be in direct proportional to the kind of effort that you put in. All right. Myth number two is you don't need to do any work. Here is a robot or a signal to do it for you. We've all seen this. We've all seen Forex gurus on the internet, on social media, coming in and say, you don't have to trade. Here's a 100% automated robot that will help you to trade, or you don't need to learn how to trade. Take my signals and profit alongside with me. Let me tell you, you cannot put your income dependent on another person or on a robot. All right, you need to learn how Forex trading works. Although some EAs and all of that can assist you in becoming profitable, you don't have to rely on them 100%. You don't have to rely on signals 100%. You need to learn how to trade by yourself. All right, learn the market, and this is why we are here today, so we can teach you on how to trade for yourself. All right. Number three is you can make a lot of money fast. This is a myth. It's not true at all. It's a lie, right? Although Forex trading can sell you the idea that you can make a lot of money fast, but in reality, that is not consistent. And for a lot of people come in the industry because they have beginner's luck. They make a lot of quick money fast, or they lose a lot of money fast, and they just have this hope that they will gain it all back. All right. So understand there is no such thing as quick money, and everybody who chases fast money will pay the price to prove that there is no such thing as fast money. So this is a myth. It's not true. It's not fact. It's a myth. It's not sustainable. Right. Myth number four is you can get rich with little to no money. Right. A lot of people have been sold the idea that you can get rich in Forex trading, maybe with a $50 or $20 account. Guys, let's be realistic. As much as you can trade with $50 or $20, that's not going to make you a millionaire overnight. Okay? It's a myth. All right? Again, in trading, the more capital you have, the higher chances of you being more profitable. It's a numbers business, right? If you're making 100% of $10,000 a month, you're making good money. But someone with the same effort making 100% of $20, it's not that much money. So you need to understand that the idea of getting rich with little to no money, it's far-fetched. All right, it's a myth. Right? I'm not saying it's impossible. I've seen people do miracles, but that it's not sustainable. It's a one-time, was it a one-time hit, what? One-time hit wonder or something like that. That's what they call it. It's luck. It's just purely luck. It's not something that you can be consistent if you want to stay in this business long term. All right. And lastly is I have a holy grail strategy that no one else knows and you can buy it. You've always seen forex gurus on the internet claiming they are the only ones who have this particular knowledge. Hey guys, the answers are in the charts. The answers are in the candlestick. There is no one secret that one person holds and they want to sell it to you. It's a myth. It's a myth. Okay. I'm sorry to bust your bubble, but that's what that is. It is a myth. It's not true. All right. The answers are in the chart. All right. Forex trading, as I always say, is purely price action. Buy low, sell high. Just that's what it's about. What happened to my English today? All right, are you guys with me? Are you guys with me? If you are with me, please give me some fire emojis in the comment section. Give me some dollar emojis. Give me some dollar emojis in the comment section. All right, give me some dollar emojis in the comment section if you are with me. All right, cool. Let's move on. Let's move on to today's lesson. So today we're going to be discussing candlesticks with key levels. If you've attended any of our previous sessions, you will know that we've discussed a lot about key levels, or what we call round numbers or RB numbers. And we're going to discuss a combination of that with candlestick patterns. We're going to discuss rectangle chart patterns with key levels, and then I'm going to give you guys some risk management tips. As I always say, risk management plays a huge role in your success in forex trading. Let's move on without wasting any more time. All right. So as we've discussed a few candlesticks patterns in the previous session. Remember, candlesticks are useless on their own, and you must always consider the market environment and what the price is telling you. Right? As with any technical indicator or tool, if candlestick points to a reversal or continuation, that does not mean that it will happen. The simplest ways to use candlesticks is with support and resistance or key levels. Right? Because support and resistance levels determine areas where buyers and sellers have set up their defenses. Looking at how candlestick reacts to them will help you greatly predict where the price will go next. What is your strategy mostly time? Can you please rephrase your question? Can you please rephrase your question? All right. Now let's move on to an example. Okay. So now let's look at this. This is your key level 1.4900. If you are familiar with the double zeros and the triple zeros, all right. In this scenario, we can see that the market is at a resistance area, all right. You badly want to enter, but you decide to wait instead because the candle that touched this level looks very bearish, all right. And then what do? Let's move on. What most of the people will do is they will either just go in there as soon as the market gets here, either go in for a sell, or if the market breaks up to the upside, even if before it closes, they will just say the resistance has been broken and they go to the upside. But no, you don't want to do that. You want to wait. Let's see what happened. The market went up, and what did it do? We have a 3 inside down formation. All right, where did it happen? At our key level 1.4900. All right, and then what do? You now have a confirmation. Okay, the market rejected there. It gave me a reversal pattern, and now what am I gonna do? I'm gonna go all the way down with it. All right, because you are a patient trader. All right, because what? You are a patient trader. As we know, patience is a virtue, and it's one of the most important virtues that you need as a forex trader. Forex trading is all about waiting for the right opportunity, taking the right opportunity, and waiting for the market to play out. If you do not have patience, you are most likely not to make it in this business. Now, let's look at what happened after the three inside down formation. Kaboom! The market went all the way. Oh, sorry, the market went all the way down. You see what happened immediately after that? You entered your sell there, the market went all the way down. If you took an early entry there, I'm sure if you looked at a smaller time frame, you would have gotten another candlestick formation there, a pin bar, a rejection, or whatever, or a double top or a double bottom on a double top on a smaller time frame, and then kaboom, the market is in profit. Do you see that? You are now on your way to buy what? Your private jet. I'm kidding. I'm kidding. Okay. You're not gonna buy a private jet off one trade. Okay. So now, why is it important to use key levels together with candlestick patterns? Because if you use candlestick patterns alone without key levels, you will have a problem, right? You will have a problem, right? Because these candlestick patterns, they need to happen at a particular level for them to be valid. Okay. Now I'm going to show you an example why. Let's look at the very same chart. All right. See what happened there. You had a hammer over there. You bought. The market went up a bit. You're in profit. Then boom, the market stops you out. All right. See what happened there. You had an evening star. What did you do? You sold. What did the market do? It went all the way up again. See there, you had a doji. What did you do? You bought. The market did what? It shot all the way down. See, only this pattern was valid. Where? Right at the key level. That's why it's important to use these two together in combination to get a better edge in the market. Does it make sense? Does it make sense? If it makes sense, please give me some fire emojis in the comment section. We're gonna go into the charts now. We're gonna open a chart now, and then we're going to identify key levels and we're going to identify candlestick patterns over there. Right. Ooh, nice. All right. Let me just open up a new chart. Let's look at NAS 100. Let's go on to NAS 100. We are on the 1 hour time frame. All right. I will start over here at the top. Let's look. There's our key level over there. We're 14,800 at our key level order. Please explain the doji candlestick patterns. If you can go to our previous previous sessions, I'm sure it is saved here on the Octa YouTube channel. I did discuss them in detail. Okay, please refer to that so you can learn about single candlesticks, you can learn about dual candlesticks, you can learn about triple candlestick patterns. All right, so please refer to that. Let me see if I can get one of the things that I can this isn't there a candlestick chart, Japanese candlestick. Trying to see if we can get I'm trying to see if we can get maybe a candlestick cheat that I can show you so you can. But even if you go on Google and search candlestick cheat sheet, you will see all these candlesticks and it will show you which ones are continuations, which ones are reversals, dual, singles, and triple candlestick patterns. All right, as we can see here, This is our key level, 14,800. All right, the market coming to the downside, broke here, came to retest there, and then we had that inverted hammer over there. All right, and then you know this is where you're supposed to sell. All right, you know this inverted hammer happened, and this is where you would have sold. And if you sold, what did the market do? The market went all the way down. All right, let's look at another pattern. Let's look at another pattern at a key level. At a key level, let's look at this engulfing over there. Let's see. It's at a 50, 950. All right, a combination of an engulfing candlestick pattern together with the key level. What happened? The market shot all the way down. Right, the market came down here. There was a fake out there. The market came inside, confirmed for us there that we are now going to the downside, and then the market shot all the way down. Right, do you guys see that? Do you guys see that? All right, over here, let's see if there's a key level over there. What's our 200? Okay, this is another engulfing over there. There's another engulfing over there. Do you guys see that? And then over here at a 50, we have another evening star over there. See, we had an evening star right at this key level, this key zone. Right? You see the evening star? There's 3 candlesticks over there. What did the market do? Went all the way down. So we had the engulfing there, and then we had the evening star there confirming that the market is going down. We have another engulfing here. All right? You guys see that? We have a bearish engulfing there, right at the key levels. So you have these 3 confirmations that the market is going to go to the downside. And look at that. What did the market do? Kaboom! Boom! Shakalaka! Let's look at bullish reversal patterns over here. Let's first see if this is at a key level. Obviously, it should be 400. Let's first check 400, 450. Okay, should be a 450. Over there. So we have this key level over there. What do you call? At 14,450. You guys can see that. 14,450, which is our key level, or you can refer to it as your support. Neiman, you can refer to it as your support. Okay, you guys get the drill. You understand it. Please, I really want to know what the key levels are. Can you please refer to our previous sessions? I explained them in more details. Please go and watch any of my previous sessions. I do go in details on this, but in simple terms, your key levels are, we look at price, all right? We look at price, and you look at your hundreds or your tens, your 50s, your hundreds, your 500s, and your thousands. So for instance, as we can see here, I said price was at 14,450. So that's a 50. We look at the last 2 numbers, all right? And then we can look at 100. Let's look at 100. This is 14,500. That's a key level as well. You see that? It's a key level. and then we can look at 600, 14,600. See, key level. All right. So you want the market, you want to take your entries at these key levels, but you also want to use candlestick patterns. All right. While we are talking about patterns, look at this. That's an inverse head and shoulder happening where? Right at the zone where our key levels are. Right? So that was an indication that the market is going to shoot up. And what did the market do? The market shot up, came back again to the very same zone, eventually took price. Price went all the way up to the upside. Right. I want to know what is key levels of gold. Okay, we're gonna get to key. Let's quickly go to gold. All right. But you guys see, you guys understand? Let's quickly go to gold. Let's go Euro USD. Let's go XAU SUD. All right. Now let's look at gold. So gold, you usually look at tens because of the price of gold, right? So let's start at the top there. My key level there will be 2,000. Obviously be 2,000. All right, that's one, and then we'll have 210. We'll have 210, 2010. All right, that's my other key level, and then we will have 1990. That's another key level. All right, and then we'll have 19. So with gold, you can also use the fives. All right, 1980. All right, and then 1970 and so forth. All right, so this will be your major ones, and then we can have the fives, the midpoints. We'll have 1970 on gold. All right, you see what happens at these key levels? Do you see that? What happens? 1960. All right, so on gold we see that. All right, you see that. Now let's look at the fives. We'll go 1995. This is where you want to take your entries. All right, see what the market did over there. See what the market did over there. And we'll look at 1985. At that, see the reaction. 1975. See the reaction over there. 1965. See, you see what the market has been doing at these prices. This is where you want to take your entries in combination with what? The candlesticks, candlestick patterns. All right. Right. So for instance, here we have the 3 inside down, 3 inside down there. Took your entry there, you'll take profit at 1980. Remember to use them as your entry points as well as your take profits. All right. We have an engulfing over there, and then we have a move to the upside. All right. We have a hammer over there. Did the market do short all the way up? All right. And obviously, if you go on smaller time frames, you'll get more confirmations. You'll get more patterns. You see, we have a nice inverse head and shoulder over there. And the market shot all the way up. All right. Key levels on Euro USD. Let's go Euro USD. So it's Euro USD, you're going to look at the last three numbers over there. So let's start from the bottom there. We'll do 104 500. 104 500. You see exactly where the market turned and reversed. And then obviously our second one will be 10500. You can do 50. All right. Then you can do 600, 104 600, but it's just going to be very close to the other one. 4600. But you see how close it is. It's too close for my liking, but you can use it. But you can either go 500,000, 1,005. So from 5 here we will go 55 5500. You see what the market does over there. We'll go 6 5. Then you can go your next one 65. You see, that's Euro USD. You see what the market does at these key levels. You see what happens whenever the market reaches key levels. There is always a reaction. All right, now let's move on. Let's move on to, I hope that makes sense. I hope it makes sense. All right, now let's look at the chart, the rectangle chart pattern. Let's look at the rectangle chart pattern. All right, a rectangle chart pattern is formed when the price is bounded by parallel support and resistance levels. A rectangle exhibits a period of consolidation or indecision in the market. The price will test the support and resistance levels several times before eventually breaking out. From there, the price could trend in the direction of the breakout, whether it is to the upside or to the downside. Most of people use this during the London session, the London breakout session. All right. So it's called I think they call it the London breakout strategy, London breakout strategy or something like that. Yes. So now this is a period of consolidation. The market is not trending up, it's not trending down, it's trending, well, it's just going sideways, just going up and down between two prices, between two key levels. All right. It's consolidating. What you want to do when trading this is you want to wait for the market to break either to the upside or to the downside. If the market breaks to the upside, you go up with it. Breaks to the downside, you go down with it. This can either be a reversal or it can be a continuation. How to do analysis in live markets. We're gonna get to that. I just want to give you what to look out for before we go into. So you can have these two prices, the market is moving between them, and whenever market breaks to the other side, you can then take. So here we have a bearish rectangle. The market is in a downtrend. We are stuck in a box. The market breaks to the downside. It's a continuation. Then the price falls again. All right. And we also have a bullish rectangle where we are in an uptrend. The market consolidates. There's an indecision. The market breaks to the upside, or and then it goes up again. Or what could happen? We could be in an uptrend. The market is stuck in the box. Then it breaks to the downside. Then that means this was a reversal. It depends again where it was happening. If it was happening at a high, at a resistance or at a high key level, we could have a double top over there, and then the market goes to the downside. All right. Does it make sense? Does it make sense? All right. Now let's quickly go to the charts and see if we can identify Is this thing to find key levels in any currency, any market, any time frame? Yes, it's on every, as long as it is a chart on in Forex, in stocks, in commodities, it is there. On any time frame, price doesn't change. On it, time remains the same. It doesn't matter the time frame. As obviously, if you scale down to smaller time frames, there is a lot of activities. If you go to the bigger time frames, there's the bigger picture of the market. But this happens on, we are on H4 right now. We can go as low as 5 minutes. You will see there is a reaction at these key levels. Look at that pullback that just happened now at this price. It happened exactly at that price on a 5 minute chart. If we go on a 4 hour chart, doesn't show much what happened, but it does show that it is a significant area. It is a strong area where market will, you see, whenever the market gets to these prices, something happens. Something happens there. You see that there is always a reaction. Even if we go 1 minute, time frame. All right, look at that. That's on a 1 minute. Look at that. That's on a 1 minute. If you're a scalper, you now know where to trade. I was trading since the last 3 years. I never knew this thing. Thank you so much. Cleared my way of watching levels. It's a pleasure, sir. You are welcome. You're welcome. That's the kind of feedback that I want to hear. You see, look at that. Look at that price. This is a 1 minute chart. If you're a scalper, this is where you want to be taking your entries. All right. Look at that. Look at that. All right. Look at that. So whenever you're trading on this, is there an entry happening on 15 minutes time frame on Euro USD? The entry, we missed it already. This is where we should have taken the entry here to the upside. You wanted to take your entry at this key level over there. All right. Let's look at 250. Let's look at the 250. Let's see if we can get an entry at 250. All right. So if the market comes and break this area and come and test it, then we can take it to 6500. All right. So you want to wait for a break on this key level over there, a retest, and then the market will go down there. Will go up there to that price over there. Are we together? Do we have any questions so far regarding the rectangle? Oh, we said we're gonna talk rectangle. We're gonna discuss rectangles. Let's go on a 1 hour chart. Let's see if I can spot any rectangles where prices consolidating between two prices. Here's one over there. Market has been going up. This is a bullish rectangle. Market played around here, broke to the outside, went all the way up. Right? See another one. Triangle, rectangle. Say this another one over here. Market has been consolidating, broke to the outside, upside, went all the way up. We have another consolidation area over there. Price has been playing between these two prices, broke to the upside, tested it, and then went all the way up. There's another one over there. This is a bullish triangle, rectangle. Right? Broke to the upside, went all the way down. Remember I said it can also be a reversal. We have a small consolidation area there, broke to the upside, market went all the way up. We also have what? A double bottom candlestick pattern over there. Here's another one. And you see they're happening near what? Our key levels. They're happening at our key levels. Key levels are important, guys. Key levels are important. All right? Playing between these two prices went all the way down after the breakout. Right? That's why it's important to use them with key levels. We have another one over here. I can almost guarantee you that we are at a key level. $70.50. Yeah, man. 70, 50. See, broke to the downside at a key level. Let's check at the top. Another key level. 7200. That's 720. We can even go 7620. We can go 7600. Just for the import for the see. You guys see that? This has actually been going on for a while. What happened? Market broke to the downside, then eventually went. That's the rectangle chart pattern. Rectangle chart pattern. All right. Now, let's see. I gave you guys I told you guys this is what we should be looking for on Euro USD. We wanna see a break on the 6250 level, and then we will continue going all the way up. All right, that's a major level over there. As you can see, even here the market reacts to this price. Even if you go back in history, 250, you see what happens whenever the market reaches that price. All right. With the rectangle, you just want to see, obviously you need to understand market structure, one, as you need to understand volumes, yes. However, you want to see a candlestick, especially on a higher time frame, close below that that key level, right? You want to see a candlestick, the body of the candlestick closing below that key level. As you can see, the market went all the way there, gave us an engulfing over there, closed below there, and then we went all the way down. If you are not sure, you could wait for the second candlestick to close and then maybe retest that level, and then you go all the way down. So like for instance, if you didn't take this entry, you're just going to wait for the break of this key level over there, and then the retest of it. We had an engulfing over there, an engulfing candlestick over there, and then what did we do? We went all the way down with it. This is just an indication that the market is going to continue going all the way down. All right. For instance, same here, the market came here, failed to break, went to the upside, right? Came at a key level, rejected it, gave us an engulfing, bullish engulfing over there, and then what did the market do? Broke this key level, retested it, gave you another entry, and we went all the way up again. All right. Does it make sense? Does it make sense? So on Euro USD, we're looking at a bullish. This is what we want to see. We want to see a break of this price going all the way up. Right? We already broke structure here, confirming. Right? We broke structure there, confirming that we're gonna go up. We may want to wait for liquidity. If the market fails to go there, it will come up until probably that area over there. Let's see our key level. It's our key level over there, 550. Yeah, man. 800. Right. The title, sure if you can check workshop LTS 1 or 2. LTS 1 or 2. This is a foundation of my trading. Right, this is the foundation of my trading. So we have two scenarios on Euro USD. Before I answer your question, we have another scenario, the market coming all the way to this level over there and going up. All right, or continuing to the upside, breaking here and going all the way down. All right, so that's a scenario that will happen. All right, let's see US 30. Let's see Nasdaq. All right. So we have currently have a downtrend, as we can all see. Right, we have a downtrend on Nasdaq. The market has been trending down. All right, let's just start that over there from the top. Right, we can see that the market has been trending down, so there is a strong bearish momentum on Nasdaq. All right, we reached this low over here, which is 14,450. All right, but there are signs of higher highs and higher lows on 1 hour time frame. So that means the market is currently correcting to the upside. All right, we don't have a clear reversal pattern showing us that. As you can see, the market has been consolidating there for a while, so that means we are also probably in a triangle. All right, I mean, we are in a rectangle currently. All right, so we want to see and then there was a gap there that the market came to close. This is our previous low that was broken. All right, so what we want to see now is we want to see the market come into this area, giving us an indication that it will continue falling at this price over there, 14,400. It's our key level. We want to see the market doing that. All right, or we want to see the market giving us a candlestick pattern over there or a rejection, confirming that the market will be going all the way down again. Or we want to see the market breaking up to the upside, testing that level, creating a low, another low, and then pushing all the way up. So that's our current scenarios right now on Nasdaq. So that's what we're looking at. So when you want to take your entry, you want to take your entry at 14,400, either for the buy or for the sell. You want the market to go all the way up, come and test, go all the way up, or the market reaching here, rejecting this price. As you see what the market did, they failed to get to that price, but eventually it got here and then went all the way down. My guess is if we continue going down, we will go to 13. I mean, we will go to 14,000. And then after that, the market will let us know what it wants to do, right? If we continue going down, that's where we are going. We're going to go to 14,000. Then the market will let us know if it wants to push back to the upside, because this is a very strong zone, right? We want to see the market coming here, pushing all the way up, or breaking this area, this zone over here, and going all the way down, right? We want to see the market breaking this zone there, or rejecting this zone, giving us. So what will happen if it comes here? It will give us a double bottom on a daily chart, confirming a strong bullish reversal. All right, that's what we want to see. We want to see the market doing that. All right, so now we can have an indication that the market is gonna go all the way up. Thanks for the key levels, as you said. Which particular, I think it's LTS 2 or 3, where I discuss it in more detail. But it's think of it as price, round numbers. It's based on the foundation of what we call the round number bias, where people just generally round off to the nearest 100, or they round off to the nearest 1,000. Right, for instance, if something is selling for $990, I would say it's selling for $1,000. If something is selling for $14,049, I would say it's selling at $14,050. So similarly with the market makers, or the big whales as people like to call them, they will buy or sell at these round numbers. That's the idea, that's the foundation behind these round numbers. As you can see, 15,200 Nasdaq sold there. 14,950 Nasdaq sold there. 14,800 Nasdaq sold. 14,450 Nasdaq bought. 14,500 Nasdaq boards all the way. You see that? That's the idea behind it. All right. So we have two scenarios on Nasdaq. We have two scenarios on Doge on what you call on just move my phone on Euro USD, and then yeah, that's my predictions for the day. Let's look at that. If you are not in the Telegram channel, please make sure that you join the Telegram channel. As soon as we have a confirmation entry, I will send the signals in the Telegram channel. So please make sure that you don't miss out on them. If you've been in the Telegram channel, you know that we are always eating over there, man. It's a buffet. It's a take profit buffet. It's a pips buffet, you know. All right. So as I promised you guys, I'm going to give you risk management tips before we end today's session. Risk management tip number one is, as a trader, the question should not be how much will I profit on this trade. The true question is, will I be fine if I don't profit from this trade? As I always say, being a trader, your number one priority is your capital protection. It's not profit. So as you come into the market, remember that it's a speculative business and it's not certainties. You're not certain, it's just a probability. All right. So the question you need to ask yourself whenever you execute a trade is, if I lose this trade, will I be okay with the amount of money I'm going to lose? All right. It's not how much am I going to make, it's if I lose this trade, will I be okay? Then if the answer is yes, then you can execute that trade. Then we can start looking at how much you can make from that trade. Risk management number two, tip number two is technical analysis skills can make you profits, but only risk management skills can keep those profits. A lot of traders focus mainly on technical analysis. And I always say, how many times have you analyzed a trade, it kicked you out and it went in your direction because you risked high or you over leveraged? I'm sure everybody that's here that's been trading for over 6 months has gone through that. So remember, technical analysis skills can make you profit, but it's only risk management that can keep those profit. Again, your number one priority as a trader is to capital preservation. That includes profit preservation. You want to preserve your profits. You don't want to make profits and take them back into the market, but it is only through strict risk management rules that you can keep your profits. All right. Number three is, good trading is not the absence of losses. Good trading is the ability to keep them under control. A lot of traders don't make it in this business because they are afraid of losses, or they think losses means that they cannot trade. Good trading is not the absence of losses. Good trading is the ability to keep them under control. As a trader, you need to understand you're going to have losses. Like today, I had losses. I encountered a few losses today. Even last week, I encountered a few losses. But my account is still safe. Why? Because I do risk management and I'm able to keep my losses under control. That even if my trades hit a stop loss, I'm still able to trade the next opportunity. So good trading is not the absence of losses. Good trading is the ability to keep them under control. Learn to keep your losses under control. All right. And number four is, making a million without risk management means it's only a matter of time before the market takes it all back. In the same breath, making a million with proper risk management rules means it's only a matter of time before you make it much more. All right, before you make much more. Now, the idea here is, if you make profits and you don't have risk management, it's only a matter of time before you lose those profits back. But if you're making profits and you also have strict risk management rules, it's only a matter of time before you become a consistent trader. So you want the secret to consistency in trading? Risk management. Strict risk management rules. Strict risk management rules. That's where you want to be as a trader. All right. I hope today has been an absolute pleasure for you guys. I hope you learned quite a lot. I can see from I can see from what you call from the what is this thing called, from the comments that you guys really learned quite a lot today. And we will meet again next week. 7 p.m. South African time, or 7 p.m. Central African time. Let us meet here for another live trading session. All right. And as I said, I'm going to give you guys a promo code for you to get your 100% deposit bonus. Here it is, Isaac Edu. Kaboom! All right. Take advantage of the promo code in 5 steps. One, you need to open the Octa trading app or visit the official website, which is octafx.com. Number two, you go to your profile. Number three, you find the promo code section in the menu. Number four, enter the promo code and press activate. You enter the promo code Isaac Edu and then you press activate. Then you make a deposit and enjoy your bonus. All right. That's it from me, guys. Isaac Edu is the promo code to double up your trading, your deposit bonus. All right. Question: how to know where to place your stop losses? All right, let's go to the charts quickly so I can show you. We can use the key levels as to put your stop losses so you're still safe. All right. So let's say, for instance, you took a buy entry here, and as you can see, our previous low is there. Again, depending on your account size, let's go 300. Depending on your account size, all right, you want to put your stop loss at the next previous key level. All right. So for instance, here you took your buy entry over there. We have this high, this previous low over here, but eventually, most of the time, what the market will do is it will come and take out this low. So you don't want to be stopped out and the market goes in your direction. So you want to look at the key level that is below your previous low, right? And that is our key level, the 5300, 05300. That's where our key. That's where your stop loss would be. In pips, that's about 20 pips stop loss. But then if you're doing 1:3 risk to reward, one, did the market not hit your 60 pips TP over there? You see, the market hit your 60 pips what you call take profit over there. So you're risking 20 pips to get 60 pips. Doesn't make sense. So you just look at the previous low, and then you just put the key level below that, you put it there. All right. Any other question? I believe that's it for tonight. Thank you for participating on tonight's session. It's been an absolute pleasure. I will see you guys next week, Monday, 7 p.m. Central African time. I cannot wait to teach you guys. I cannot wait for you guys to learn, to learn more about how I trade, all right. I cannot wait. I cannot wait for you guys to join me next week, and we're gonna have a great time. We're gonna have a beautiful time, and that's it from me, guys. You guys have a blessed evening. The camera's here. Here. You guys have a blessed evening. I wish you guys all the best for the week. Profitable. Make sure that you are in the Telegram channel. The link is in the. You are amazing, guy. Thank you, man. Thank you, man. You are amazing too, Goldie. Thank you so much. I appreciate it, man. I'm humbled when people tell me I'm amazing. Thank you, man. You are amazing too. I love you, my guy. All right. That's it from me. Make sure that you join the Telegram channel. The link is in the comment section over there. Please make sure that you join it. And then more signals will be sent in there, more confirmations, and more educational free content will be sent in there. We do psychology Thursdays, where on Thursdays we give out free psychology tips and risk management tips. So make sure that you don't miss out on that. And yeah, man, let's have a profitable week. I pray this week is going to be a better week than last week. And man, I pray that you and your family be blessed, be favored. God protect you. Wish you long life. And remember, I love you and Jesus loves you. That's it from